Hey guys, how's it going? That was the closing bell for January 25th. My camera is not operational still. Well, I'm sure it'll be fine by tomorrow, but for now, we'll just be looking at the screen. We can see that the S&P 500 closed pretty much exactly where it opened. So it looks like it will have a little doji candle right over there. If we look at QQQ, QQQ is lower than where we opened. So we'll have to see how that played out. I think very close to where we closed yesterday, though. So the S&P 500 just chopping sideways, not a lot of action. You can see that we just went in between these three purple lines pretty much all day, traded down, traded up, nothing really exciting. So when we look at these daily charts, uh, we do almost a doji candle right there, slightly green. You can see that we are up 0.5% still. And so this blue line that we drew is pretty good. It's following it pretty much exactly. We still haven't quite gotten to that 490 level. And it looks like that 490 is really going to be a little bit of a challenge for this market. So unless we get really amazing earnings, for example, from the FANG stocks next week, then it's going to be hard for us to get past this. Right now, so far, we're just very slowly creeping up towards that 490 level. In the QQQ, we're starting to struggle a little bit sideways, completely sideways today. So that keeps us at the +3 ATR over here. And we will just expect that sometime within the next week, this QQQ should pull back at the very least to its +1 ATR. And so this morning we talked about that baby QQQ hedge. That's really more for a larger move. But if we move down to the +1 ATR quickly over the next few days, a baby hedge like that will still make some money. So I really highly recommend that you start looking into trades like that, ones where you can lose very, very little money, but potentially make a lot of money. So I'm going to do those in my own portfolios. And I guess I shouldn't say that I recommend that you do that because I can't recommend anything. I'm not supposed to recommend anything. So you do what you like, but that's what I'm doing. So if we look at our Dow Jones, Dow Jones also very flat, up 0.64% today, but excuse me, over the last week, just really chopping sideways. And if we look at IWM doing the same thing. What we really want to see is these pink lines we drew like almost a year, maybe 2 years. No, that doesn't make sense. A year ago. A year ago is where roughly a year ago is when we would have drawn these lines and we came and we challenged, we went above but didn't sustain. So we really want to see this IWM be able to get over that second pink line before we are fully bullish mode. But it really does look like we're going to come back down before we go back up. We're just seeing too much pressure in the QQQ to believe otherwise. Bonds chop sideways as well today. Technically it's up, but you can see that over last week, it's just been chopping sideways like this. So no real action from the bond market. And like I said this morning, we're not really expecting any action because we have that Fed meeting on January 31st where they're going to make a decision. So we're not going to expect a lot of volatility or movement outside of this range until that actually happens. Most likely, it's just going to be exactly what we expect. Later on, they'll release the minutes for the Fed meeting. So generally, a couple of weeks later, they'll release those minutes, and then everyone will be scouring for language of, hey, are we going to start cutting rates anytime soon? And if they actually mention something, then that'll probably drive markets higher. But if they don't mention anything, or if it feels like they're just going to keep putting it off, then that could move markets a little bit lower. As long as we feel like we're going to get less rate cuts than the market anticipates, then that'll be the case. And I told you earlier that it looked like the market was pricing in 6 rate cuts for the year. The Fed has only been talking about 3. So if it looks more and more likely that we're going to get 5 or 4 or 3, then there'll be an associated market pullback. So a few risks in the market right now, but mostly going by technicals, we are just once again at these overbought levels, and we do either need to consolidate like we did over here in November, or have a pullback like we did over here at the end of December. But this time, because of that large movement, because we're up about 20% already, just like we were up about 20% over here, we do anticipate a deeper pullback or correction. So down 5 to 10% would be what this market needs in order to get to really bullish markets. If we don't, if we only get maybe 2 or 3 or 5% pullback, so maybe back to these previous all-time high right here, then we could go a little bit higher, but we're not going to expect it to just go screaming higher. And we wouldn't expect small cap stocks to lead from there. If we get this full correction, then we potentially see the small cap stocks starting to lead, and then we would start to position ourselves for a full-on bull market for potentially the rest of the year, at least until the election cycle in the United States. Let's take a look at what happened in our sectors. So what I'm really interested in is, did tech continue to lead today? Because it's been leading all week. And today, now that we went sideways on the QQQ, are they still leading? And if they're not, then which sectors did lead today? So where is money? Where did money stop getting allocated to communications or in tech because QQQ went sideways, right? And instead, what got money? So let's take a look at the change for today. Energies, utilities, some communications, retail. Okay. So if communications caught a bid, that means the other areas of tech were very weak. Yeah, so we see them way down here at a just barely 0.34%. So that's really interesting to see. We're at pretty much all-time highs for the QQQ, and today a more defensive sector, utilities, caught a bid, and then same with energies. Energy is not necessarily completely related to the equities markets, but yeah, that's parabolic. Wow. Over the past week, that's just really a parabolic move up into the MA50. I wouldn't trust that just yet, just that huge drive upwards. What we'd really want to see is it clear that MA200 very comfortably and then start to move higher. So like this, we went outside the MA200, but it just kind of chopped around. So if we got that again, we wouldn't believe in an energy rally. And if we get to just to MA200 and get rejected, then we wouldn't believe in the rally. But this parabolic move is way too fast. So not really anticipating that we're going to be able to break out of that MA200. So I wouldn't be putting my money in XLE right now or energy stocks right now. It'd be kind of what actually I might be taking profits or looking for really, really weak energy stocks to potentially short soon. Not quite yet. Not right here where we just popped above the MA50, but if we continue tomorrow or into next week with this parabolic move into that MA200, then I'd be looking at the weakest stocks to potentially short. So we are seeing some signs of weakness in topping of the QQQ, at least, not necessarily SPY. And we can put on a baby hedge on the QQQ like we demonstrated this morning. But overall, we are still in trend and the trend is intact. So we don't want to go nuts. Okay, so overall, our portfolio should still be positioned to the bullish side. And we are only just taking little tiny bets on it coming down. So what we're saying is that they're lower probability, right? At best, 50-50. So they're maybe 20%, 25%. But if you saw the hedge that we put on this morning, or that we demonstrated this morning, that was a potentially 1,000 to 1,500 versus a $200 loss. So that's a 6 or 7 to 1. So if I have a 25% chance, that would be a 4 to 1. And so the 6 to 1 or 7 to 1 is greater than the 4 to 1, right? So we still have positive expectancy in a trade like that. So I'm still looking for positive expectancy. I just don't care if the win rate is really low, as long as my reward to risk ratio is really, really big and overcomes that. So understanding that in this upward sloping environment, they're just hedges. They're just tail risk hedges. So we could lose money, like probability wise, that we are favored towards losing the money. So we make sure that the money lost is an insignificant amount to us, but on the off chance that it goes the less probable way, then we end up making a whole bunch of money to make that risk worth it. Okay, so if $100 or $200 in your account is too much, too significant of a loss, then we don't take the trade. But if $200 is a drop in the bucket and you say, all right, $200 doesn't really matter, but I could potentially make $1,500 here, and $1,500 would actually kind of help my portfolio, then it's a great trade. Right? So we just want to make sure that when we look at trades, that they are appropriate for our portfolio and appropriate for our account size. Okay, so basically just emphasizing what we saw earlier this morning, because today, during the day, the market didn't really give us anything. We just chopped sideways. So the picture isn't really different, except we have a little bit more information in that we started to shift away from tech sector, although the communications is still bid up, maybe because the FANG stocks are, and a lot of the FANG stocks are in the communication sector and they're reporting next week. So some people are anticipating good reports out of the FANG stocks. But more importantly, XLU and XLE and XHB are at the top. XHB, XLU are interest rate sensitive. They're interest rate sensitive. So we got this Fed meeting coming up next week. And if they just announce that what the market expects, then we don't expect a huge reaction, but it would be slightly tiny bit positive for these interest rate sensitive sectors. So very interesting that we're seeing that, or at least today, we saw a move away from tech and our QQQ went sideways. So that's the one piece of interesting additional information that we got from today's session. Okay, that's it for today. Have a wonderful rest of your day, and I will see you tomorrow morning.